Good evening, ladies and gentlemen. This is Barry Norman on behalf of ETX Capital, and welcome to our webinar this evening. Now, for those of you that are joining us for the first time, ETX is a regulated provider, and therefore we're required by law to give you a risk warning. So let me read that and get it out of the way. Trading in the financial markets can result in the loss of the amount invested. Do not trade with funds that you cannot afford to lose, and seek advice if you do not understand the risks. All information is provided in this webinar is for educational purposes only. ETX Capital and the presenter are not financial or investment advisors, and we do not recommend any securities or instruments of any kind. Any securities or instruments that are mentioned throughout are for educational purposes only. Now, for those of you that aren't joining us through the internet tonight and don't know much about ETX, we are a fast-growing financial services company based in London. We are authorized and regulated by the FCA, the Financial Conduct Authority. We also have a broad global client base, and we're a member firm of the London Stock Exchange. Now tonight, our class is called Bollinger Bands for Binary Options. Now, Bollinger Bands are been around since the 1980s. They were developed by a technician known as, with the name John Bollinger, hence Bollinger Bands. And he developed this technique of using a moving average with two trading bands above and below it. Unlike a percentage calculation from a normal moving average, Bollinger Bands simply add and subtract a standard deviation calculation. Now, tonight's class is broken into three segments. The first part, we'll be discussing what Bollinger Bands are and how they're calculated and how to put them on your chart. That's the first and second part. The third part, we'll be learning a strategy, but the strategy is specifically for binary options because tonight's class is sponsored by ETX Capital's Bollinger binary option platform. But the understanding of Bollinger Bands and how to apply them and build them on charts is standard. It is the strategies that are different based on what you are trading. So when you go to the pub tonight after class and you're talking to your buddy and tell him, oh, you know, I learned all about Bollinger Bands, and he starts telling, well, I do this and I do that and I do this. Make sure that you're talking about for trading the same way. Because remember, in binary options, we don't need to know stop losses and take profit points, because binary options, you're entering a trade and it's taking it at the expiry. There is no leverage and no margin in binary options. So building a Bollinger Band is easy. The hard part comes in the interpretation. And this can be learned but must be practiced to recognize easily. Bollinger Bands that you read about are for trading Forex and stocks. This interpretation will not help you trade binary options. Now remember, when you're trading binary options, you only need to decide three things. Which asset, and I will show you how to track many assets at one time. Which direction, that is the important part of binary options. And Bollinger Bands will tell you which asset has the momentum to move in a particular direction, and it'll tell you when it will occur. But we'll talk about that application for binary options at the end of the class. Right now, we need to learn what Bollinger Bands are all about. Now, Bollinger Bands use a moving average band, which is simply an indicator frequently used in technical analysis, showing the average value of a security's price over a period of time. So for instance, gold is trading at $12.50 now, and you're looking at, say, a 1-hour chart, and you want a 20 time frame moving average, you would take gold over the last 20 hours and take that closing price for those last 20, add them together and divide by 20, and that would give you the standard moving average line. Pretty simple. It's just an average. Now, moving averages are used to emphasize the direction of a trend and to smooth out price and volume fluctuations or noise that can easily confuse the interpretation. Now, Bollinger Bands consists of a price line and two price channels, the band above and below it. So what we're looking here on this chart is you see the blue channel. the top of the blue channel, you see a slightly darker blue band. In this case, it's blue. It could be red on your charts. We're going to look at that in a minute. But this is the top is called a Bollinger Band, and the bottom is a Bollinger Band. And then the area in between is the price is the channel. So we calculate the upper and the lower band using a 2 and 20 day standard deviation of the moving average. Now, back when I started trading 40 years ago, we had to do all the calculations to do this. Today, you don't even need to really know the formula because, first of all, Bollinger Bands is a very popular indicator, so all charting systems have them. And with all the new computerized charts that you're using, you just click on the button that says Bollinger Bands, and it just drops the Bollinger Bands on your chart for you. But you should know what they are trying to tell, what the basis is of the calculation. Now, the band, this blue area in between the channel, contracts during a less volatile period in the market. And when the markets are volatile, it gets wider. Okay, or they expand as markets get more volatile. Okay. The shape of the channel doesn't tell you anything. It simply tells you how volatile the markets are, but it's not part of any strategy at all. And you get all types of weird shapes on it. And this one, to me, looks like an alien out of some science fiction movie or a tadpole. Now, yes, we can see when it's very wide up here that there was some type of volatility in the market. And we see when it's very narrow that the markets were very congested or flat. But that's all that we see. It's not predicting or telling you anything. So you see all types and shapes of the Bollinger Bands. Now, what we're looking for with Bollinger Band is the relationship between price movement and the upper and the lower band. This is the upper band, and this is the lower band. And this is price. And there is a relationship between these bands and price that if you're trading in CFD or Forex will tell you everything you need to know. It'll tell you what the swing in the marketplace is. It'll help you figure out where to put your stop loss, where to put your entry, where to have your entry points. It tells you everything. These bands cover all fields. But it is the relationship between these three items that tells you that, not the width of the band itself, not the shape of the band itself. Now, historically, when a price movement has been identified originating at one of the Bollinger Band limits or bands, it will more likely than not continue at least to the opposite limit band. Bollinger Bands are in essence a graphic representation of the volatility that exists in the market for a particular stock or asset or security. As such, they allow the investor the possibility to identify periods where opportunities for undertaking a successful position can arise. The attractiveness of use of Bollinger Bands to any investor is in its ability to quantify relative price levels and volatility. When used in conjunction with price action movements and other indicators, this investment tool can generate signals that foreshadow significant moves, allowing for profitable trading opportunities. When used in its most simplistic fashion, this indicator is considered an excellent signal to determine if the investment under consideration has the momentum to sustain a price movement. And for binary options, this is the important part, because binary options are the most simple type trade you can have, and you're simply looking for an indicator to tell you that something has the momentum to carry it up or down. Now, when price touches the upper or the lower Bollinger Band limit, this signifies there's an opportunity to consider concerning the trade of the investment. Watch for a gentle convergence and then a slow divergence. Now, Bollinger Bands are all visual. There is nothing outside of what you're seeing on your chart. You can't do it on a piece of paper. You can't do it anywhere else. It's completely contained in what you see with your eyes on a chart. Now, the easiest way to find trades using Bollinger Bands is to find an easy, reliable charting service. There are many free ones like TradingView, which we're going to use for class tonight. And you just click on the free charts and see just how easy it is to use Bollinger Bands. Now, let's go over to a chart and instead of let's talk about stuff, let's put them on. I will show you how to set them up on your charts properly. And once you set them up on your charts and save that layout, you never have to set them up again. So this is a one-time thing, but sometimes you wipe out your settings or you go to new charts, but you should know exactly how to do this. So let me pop up some live charts. And we're going to be using the charts from tradingview.com tonight. And let me get these Bollinger Bands off here because we're going to do it together. And let's change this to a I just like price to be black. So we're looking at the pound US dollar for no other reason than that was what was up on the screen for this evening. And we're looking at a line chart. This is the most simplistic chart you can use. Now you can use Bollinger Bands with bar charts or with candlestick charts. Period. You can use, and they work extremely well. There's some excellent strategies of how to use Bollinger Bands with candlesticks. Now, first, it still doesn't matter. You still have to get them on your charts. So for tonight, we're using a line chart, and I always use Bollinger Bands in a 30-minute chart. So we're looking at Bollinger Bands. Right now, we're looking at the pound US dollar in a 30-minute time frame. And for a binary option strategy, you can only use this strategy in the 30-minute time period. Now, because Bollinger Bands are so popular, we just simply go up here to indicators, scroll down to Bollinger Bands, and click on, and they put them on our chart. But as you notice, they're not so easy to see and so nice. They use awkward colors and they use lines. You need to be able to set these up for yourself in a way that you can see them easily. Now what you see is the upper and the lower bands. And a simple moving average line. Bollinger Bands are always in a 2 and 20 time frame. You have to always use the 2 and the 20 time frame for your calculations. Otherwise, they're not Bollinger Bands, because when John Bollinger developed these, he developed them with a 2 and a 20-day moving average. So let's go see how we make these more visually acceptable so that we can understand or see better what we're looking at. So first we want to take our moving average line here, which they call the basis line for Bollinger Bands, and we're going to make it a bright red. We're going to make it a little bit thicker so we can see it easier, and we'll leave it as a line. And so now we have our moving average line going through there in a bright red. Now we want to change our Bollinger Band lines because they're hard to see in this light green color. And we're going to go click them, make them a little bit thicker because we want to see the relationship between the upper and the lower bands. And we're going to use blue, only because I like blue. And we're going to use our background, and we can set our background in anything we want, but we're going to set it in, see, we can make the background yellow. So we have our Bollinger Band channel in yellow, we have our bands in blue, and we have our moving average line in red. Now, we have to start being able to tell a story with this, or see what the prices are trying to tell us. But this is how simply you put it on the chart. And once you save it as your setup, anytime you want to go back and use it again for another asset, EURUSD, it's saved all your settings and you never have to reset it again. Pretty simple. Now, let's go back and talk a little bit more about, now that you know how to put them on charts, let's go talk a little bit more about what you want to do with these things. Now we just have lots of scribbles all over a chart. So let's talk about what these are trying to tell you. So let's go back to my PowerPoint. Okay, now, what we've looked at so far is the same process you would do regardless of what asset you were trading, no matter what market you are trading in. Oh, let's go back to the charts one more second. I always start out using the line chart, but then if I want to go you want to use a bar chart or drop the candlesticks on, you can. Plain and simple. It's easy enough. You just click on your candlestick. I just always do my setup with a line chart because we were doing so many squiggles. It's just easier. Now we have our Japanese candlesticks on the chart. If we want to change it to a bar chart, we can change it very simply to a bar chart. We don't have to change any settings. We have everything there. So then you can decide how you want to use it. Now, let's go back to change this back to a line chart. And you're going to see why in a second we were using a line chart. Okay, now let's talk about binary options. Now remember, when you're trading binary options, you're simply finding the asset you want to trade, and you're not really concerned with what price it is trading at the moment. You're simply deciding whether it has the momentum to be up or down at the expiry time. So the expiry and the direction are what's important in binary options, not what price it is. You don't care if gold is at 1251 and going to go to 1255. You don't make any more money in binary options. You have a predetermined payout, and then most of them are 80% to 100%. So it's already preset. So what you're looking for in binary options is something that's going to tell you what asset, which direction it's going to go, and at what time period will this occur. That's all you need. Because since you don't have to worry about stop losses, there is no swing of the marketplace, there is no leverage, there's no margin in binary options. And there's only 3 choices you can make outside of how much you want to invest: is direction, time, and asset. That's it. Now, to start making sense of this, we use a price line, but we don't need a moving average line. And we're going to use a bar chart. And this is only for binary options, because what we're looking for is the relationship between the upper and the lower band and the price movement. And we're looking, and we have 3 sets of rules each. So there's a total of 9 rules, but they each come packaged in 3s. So what we're looking for is a gentle convergence, what's called a slow ride, and then a smooth divergence. What you can see here in example 1 is price, which is the dark blue line, comes up and it converges with the upper band. It actually meets that upper band, and then it rides on top of it. And then it diverges out of the upper band. In this case, it's a downward movement, and it touches it, rides on it, and then diverges out. You'll have lots of times where it touches and breaks through, times that it bounces in and out, times it forms a relation, but it doesn't have the convergence and what we call the slow ride, where the price actually laid on top of the band. Now, because the band is constantly calculating as price moves. Sometimes they can run together on top of each other, especially in a market that's not volatile. I've seen them run together for almost 20 minutes. So it's not uncommon. It's not unheard of. But so what we're looking for is, number one, a gentle convergence, a slow ride, and a smooth divergence. Now, the best way I can describe this to you, and to try to give it to you in some type of visual description, is I say, imagine a couple participating in a ballroom dance contest. Don't worry, we're going to stay on dance. We're going to go over to football teams in a little bit, but right now we're staying on dance. And this team practices over and over, this couple. And when they get to go to the competition, when they arrive, the judges tell them at their arrival that there are 3 qualifications that they must complete when they enter the dance floor if they want to start the competition. So in other words, if they don't complete the qualifying steps, their routine won't be counted. They'll be disqualified. And they tell them when they enter the dance floor, they want you to take your partner and gently pull her into your arms. They want you to do so many steps together in synchronization, and then they want you to push your partner out from your arms into the dance floor and then start your routine. If you do not complete these steps, you will be disqualified. They tell you they don't care how long it takes. They give you some basic guidelines, but you have to fulfill the minimum. And that's when we're going to get to our second set of rules. But they tell you the gentle convergence, the slow ride together, and the smooth divergence. So imagine it. You step onto the dance floor, whether it's your wife or your husband, and you greet each other, you pull each other into each other's arms, you sway together with so many steps, whatever the judge told you, and then you push your partner out onto the dance floor and you begin your routine. So if you ever watch Dancing with the Stars, you know how they do this. So this is the first part of what is the relationship that you're seeing between the bands and the price. Now, it doesn't happen often. It can happen sometimes 1 or 2 or 3 times a day, but there's so much price movement that you have to see. If you can see this visually, then you'll see it happen. Now, this dance couple practices hours and hours and hours a week. And they practice so they have their routine down pat, because they don't know when they fly across the world to do this competition. They don't know where the film crews are going to be, where the judges' tables are. They just know they're going to perform in an 8x8 area. They don't know where the stairs are going to be. They just know when they hit that dance floor, they're going to do their routine. And the only way they have it down pat is hours and hours and hours of practice. Not looking at the room, not looking at the cameras, not just practicing. Because each time they go into competition, it's a different environment. This is the same when you're trading. These happen in all different shapes and sizes. And you have to practice seeing these over and over again. And the only way you'll get them down pat is to see them all the time and realize which ones are acceptable Bollinger Band signals and which ones aren't, so that you start to trust your instincts. And now we're going to switch over to football. Okay. So we're done with the dancers. Now you're going to say to me, well, you showed me these 2 beautiful bands on a chart, but I can't trade those because they happened hours before. And you're exactly right. Because the only place you can trade is at the wall here moving into the future. And the only way you're going to master this is to practice, practice, and practice it over and over again. So when you're called into your actual competition, you're ready to perform. Not at the end, not at the middle. You got all your outfits, all your stuff up. So imagine we are a football team, a soccer team. I'm American, so I talk U.S. football. Now, you have a particular play. Your squad, and you're the quarterback. You have a wide receiver, and you have a specific play that your coach has given you. You've read in the book. You've learned it. Now you practice it, and you're the quarterback, and you're throwing the ball down 10 yards and hitting that wide receiver all the way out on the left-hand side of the field, and he needs to know exactly where to be, and you need to know where to let that ball go so it is right, so he can grab it as he's running. Because when you're playing the game, you're going to be getting charged by 400-pound rushers, and he's going to be blocked out there by all the blockers running around, and he's going to be running, looking over his shoulder, trying to get in the position where he needs to be, so that when you're scrambling behind the line and you let that pass go, it ends up right in his arms. Now, it doesn't happen right often, but when it does, it's a beautiful thing. You get your first down or you score your touchdown. But unless you practice it over and over again, at first you practice it by, just throwing the ball to him. Then you have, your squads, and you actually simulate real games, and you go on and practice until you have the belief and the confidence that you know exactly what to do. Because Bollinger Bands happens against the wall. And what it looks like when I showed it to you in the beautiful picture, and what it actually looks like at the wall, is far from the same. Now, here is a perfectly beautiful Bollinger Band trade, but it doesn't look anything like what I showed you on the picture. So you need to have more specific rules. So the second set of rules we have to apply is that the slow ride that we talked about earlier here, when they converge together, and the price converges together, they must ride together. That means the price and the band must lay on top of each other for a minimum of 2 minutes. There is no maximum, but there is a minimum, because what happens is there's lots of times where these come together. But you're looking for something to say, you have the momentum to move in this direction. So it needs to ride together for a minimum of 2 minutes. Then when they do diverge, the price must diverge out of the band. So that's why you have the white area in the back. And at precisely 5 minutes, not 4.5 and not 6, precisely 5 minutes from the time it diverged, you will enter a trade in that asset going in the direction that it is moving, with a maximum expiry time of no more than 30 minutes from the initial convergence. So imagine the band and the price came together. When they came together, they rode together for 3.5 minutes or 4 minutes. Let's say you take 4 for easier. Okay. And it doesn't have to be 3 minutes and 22 seconds. That gets a little bit over the top. 3 minutes, 3.5 minutes, 4 minutes. But let's say it rode together for 4 minutes. Then it diverged out, and you had to wait 5 minutes from that divergence to trade it. But the trade must take place in less than 30 minutes. So it means You have a 4-minute ride, 5 minutes of divergence. That means the expiry time must be no more than what? 4 plus 5 is 9. 30 minutes was left, no more than 21 minutes from now. So you must find an expiry on the binary options platform in less than 21 minutes. Well, since most assets have an expiry in about 15 minutes, you're perfectly fine. But sometimes some assets only have an expiry in a half hour, or late in the day they might not have an expiry for an hour. But what the asset is telling you is it has the momentum to continue in the direction it is moving for no more than 30 minutes from the beginning of the action that took place. And the only way you're going to believe these numbers is by practicing them over and over and over again. And you don't have to stand there looking at charts. You can go back tomorrow and look at today's charts and look and see if you can locate these, because you can use your crosshairs and put on there and figure out the times. Even when you're trading with them, you don't have to be sitting there staring at them, because you know if it converged, the smallest time frame that could happen would be 2 minutes for the divergent, 2 minutes for the slow ride, 5. So the most of it happened was in 7 minutes. And I'm going to show you how you can do this very easily, monitor lots of assets without spending much time at it. But you have to practice this over and over and over again, because the only way you're going to get the confidence to believe that it does really happen and it gives you successful trades is by practicing it. Now, the key to Bollinger Bands is look for assets that are nearing the bottom or the top of the band, and then wait to see if they generally converge. Now, what you're looking for is, as I told you can only trade at the wall. And if you imagine this wall is like a mirror, when you put your face all the way up to that mirror, everything gets distorted. So unless you believe in the rules, everything's going to look distorted, because here, in this asset, let's see if I can get a finer pencil on here. You actually had the Bollinger Band moving up this way and out. You have price moving up this way. They rode together, they converged, and they rode together all of this time. And then at 5-minute point, you would have traded that asset to continue in this direction. But this is what you see at the wall. It's all distorted. And you can't wait until it's over to say, oh, look at that, it was a because then you lost the trade. So the only way you're going to get to see these and get the confidence to know what to do, because they all lay out differently. You have to follow the rules, because the rules are what tells you, because you can have all different weird looks at this, distorted looks at the wall. But as long as you get the slow ride, you get the convergence, the slow ride, and the gentle divergence, at that 5-minute point of that divergence, you're ready to trade, okay, regardless of what it actually looks like. So hold on, my pen won't shut off. Here we go. Now again, here's another trade with the Japanese yen, okay, and we actually got, if you could look at it very close in your charts, we actually got a slow ride and a convergence and a divergence, and could have traded that asset. Okay. So here, when you're looking at them, you see all of them, you see them beautifully develop. Okay. But you also don't want to be fooled by them, because you have all kinds of weird things happening also. Okay. Remember, convergence, slow ride, divergence. Here you had all kinds of bouncing in and out, but nothing that was a Bollinger Band trade. Here you had just a fall in price. So you actually kind of had a slow ride. You didn't actually, but you actually had a convergence, but it just dropped. You didn't have a slow. The price just fell completely straight down. So you have to learn how to disqualify all these. Now again, here we had a beautiful Bollinger Band trade. it converged and it rode on and it moved out and it gave you a beautiful trade. Here we had a trade that you would have made money on, but not by a Bollinger Band strategy. It just happened to be that the asset touched, didn't ride together, popped out and moved straight up. Here is the dance couple. Converged, rode together, and moved out. And if you notice, we have different charts. It's all the same regardless of your charts, but you have to get, by practicing, you'll know how it looks on your particular chart. And you get your eyes used to this stuff. Like here, could have fooled you, but this wasn't. It bounced out, touched in, bounced in, and then moved up. It isn't based on a Bollinger Band strategy. So remember, we have 3 sets of rules: convergence, slow ride, and divergence. The slow ride must last for 2 minutes or more. The divergence for exactly 5 minutes. So if your slow ride lasted 4 minutes, like we said, and then 5 minutes from the divergence, you would have traded after 9 minutes. If the slow ride lasted 6 minutes, you would have waited 5 more minutes, then at 11. And the trade must take place within 30-minute expiry from the initial convergence. Now, we move over to a set of rules that will make this easy for you to watch lots of assets at one time. And the assets move through 3 stages, what we call keep an eye on me, watch me, and then trade me. Now, trade me is very easy. Trade me happens exactly at that 5-minute mark of the divergence. Watch me can take place anytime between a convergence, a slow ride, or if you got back there and you saw it in the divergence, if you can go back and verify the slow ride and figure out what the time is by using your crosshairs, you can trade it. And to keep an eye on me is where you start watching the assets for possible signals to trade. So let's go over to the live charts again and let's see how this is done. Now, for Bollinger Bands, we do not need the moving average line. So we're going to get rid of that. We get rid of it by just turning off the basis line. And what we're looking for, because remember, we can only trade up here at the wall. So the only thing we're concerned with at the moment to trade is what is happening here. What we're looking for are assets. Now remember, in binary options, we have a limited amount of assets we can trade. So you don't want to go off all half-cocked to some asset that's not available on the binary options platform. All we want to do is we're going to be looking for an asset that the price is getting near the upper or the lower band. So we could do this real quickly by GBP USD. Just clicking them in here. And we can see, nope, it's a big wide band. Price is in the center of it. Now this time of night, because the markets are very slow, there's very rarely something happening anyway at this time of night. We can look at the AUD USD. Now, this one still is diverging because the price channel is moving down and the bottom band is moving down. Price is moving up. There's nothing there. We can look at the NZD USD. And what we can see with the New Zealand dollar, the price is pretty close to the lower band. So what we want to do is we're going to put this on my keep an eye on me list. We're going to just leave this chart open in the background, and every few minutes, the most that could happen right now is even if it formed the convergence right now, it would be minimum of 7 minutes from which you could trade it. So we only need to come back here in 7 minutes at the most and look to see if anything's happening with it. That's it. So we put that on our list so we can keep that chart open in the background. So we'll leave this chart open in the background. I'm just opening a fresh chart. We're going to leave that one open in the background. We're going to get the moving average line off of here again. And so let's go look at gold. Now, gold isn't close. It doesn't look like it's moving towards anything. Now, you can see a little while ago, earlier today, we had something, but we really didn't get a slow ride. I'd have to go back and figure out the timing on this, but they converged together. I don't know if they actually rode together long enough to have a slow ride. Because again, see, we get these all the time that are forming something similar. Now, this one actually had a nice convergence and a slow ride all the way through there. Probably would have fit, and you probably would have gotten a trade in with that one right here. See, on here, this was just price moving straight up. It just broke through the band. This one, we'd have to go back and check the timing. But gold isn't offering any trading scenario right now, so we don't want to pay any attention to gold. We can look at WTI oil. Well, let me get the marks off this chart. Okay. Oil isn't offering us really anything in a trading signal. It's not close. Okay. But price is moving down. The bands might be contracting. So we might want to keep an eye on oil. We want to look at Apple. Okay. Same thing with, see, we're looking at the stock right now. Nothing there in between. So let's go back to currencies. What else can we trade? Euro GBP. Okay, now we see the Euro GBP bounced off of the band a little while ago. The band bounced right back. The price bounced back into the band. The band's eased down. Maybe because there was a relationship just not so long ago, we'd want to keep an eye on this. So we would keep it open in the background. So now look at that. See the NZD, I just reopened it for you. And the New Zealand dollar, the Kiwi, had moved down there and then it came pretty close. It's probably going to have some type of a convergence. What is going to happen, we don't know. But this is one we want to keep a close eye on. But this is how you can watch a lot of assets at one time without staring at your charts. Because again, you only have to come back here the most every 7 minutes to see something happening. So let's see if we can see something. USD CAD. Okay. Again, because it's the middle of the night, there's no volatility. Volume's down. There's no anything going on in the markets. You know, U.S. markets are towards the end of the day. There's very little trading till the Asian markets get open. Let's take a look at the Euro JP, EUR JPY. Okay. Now again, we have the Euro Japanese Yen kind of close to the bottom line, so we might want to consider keeping it open. USD. The US dollar Japanese yen are stayed in the middle. So let's keep an eye on the EUR JPY. So we'll keep these open while we talk. Let's go back to my PowerPoint for a little bit and we'll talk a little bit more about what we need to do on so remember we have 3 sets of rules. Convergence, slow ride, divergence, dance partners. Okay. Then we have the 3 sets of the slow ride for 2 minutes more, the divergence for exactly 5 minutes, the trade for 30 minutes. This is the football squad because he needs to know that while he's getting rushed, if he's counting down for 22 seconds, he's going to release that football at exactly point, and he knows exactly what arc it's going to go on and exactly where he's hitting, whether his receivers are or not. He's hitting a point on the field where he has practiced. Okay. So he has practiced over and over. So he's got his how many minutes he's staying behind the scrimmage line while he's getting rushed, when he's going to snap the ball, and where that ball is going to land. So we have the slow ride, 2 minutes or more, the divergence for exactly 5 minutes, and then the trade to expire no more than 30 minutes from the initial convergence of the 3. And then to keep your chart set up and ready to go, you start out with an asset that are in the frame of keep an eye on me, which are the 2 assets we just ended up with. Okay, we have the Euro JPY and New Zealand dollar, and we're just keeping an eye on them. They're open in the background. Once they make that initial convergence, we're going to watch them closer. And then, but even so, once they made that initial convergence, we know we have 7 minutes from that point, minimum of 7 minutes, that we can go back and check it at that point. So you're not glued to anything. And then exactly 5 minutes after they diverge, you're going to make that trade. And you've got to learn that exactly at that 5-minute point, you're going to make that trade. So that's when it goes in that trade me stage. And that's where you have to understand and practice that over and over so you blindly trust it. So you make those trades without hemming and hawing or trying to do some more calculations, because what happens, you'll get too late and you'll miss that momentum move. So again, convergence, slow ride, divergence. Slow ride 2 minutes or more, divergence for exactly 5 minutes, trade within 30 minutes of the expiry from the convergence, and keep an eye on me, watch me, trade me. So let's go back over and see if either one of our assets has moved close. The Japanese yen is still moved a wee little bit close, because remember, you have 2 things happening. You have price moving and you have the band constantly recalculating. Okay. So we have price looking like it's getting fairly close to that band. So we're going to keep an eye on that one. We're not going to move it to the watch me stage. And we can see all the activity since we first started watching this New Zealand dollar, but it still hasn't made a convergence yet. So we'll go back during another 5 or 7 minutes to see what's going on. Because remember, we can always calculate how long they have done the thing. So we know how long that slow rise. We can get back, calculate when the convergence happened. Because we know we're looking at a 30-minute chart. Each one of these frames represents 30 minutes, so we can calculate the times. So all we have to do is keep watching for what we're looking for visually. So on that note, I'm going to say goodnight to you. Wish you all good luck using this. The only way you're going to master this is by practice, 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 practice. Remember your 3 sets of rules. Get your chart set up. Practice them. Look at them. Go back tomorrow and look at today's charts and just see where they unfolded, see where they were, see what developed. Go back and try to figure out the times that happened, when it happened, until you, in other words, you practice your routine over and over and over again. So when you get put in a new environment, you can still do it and you trust your moves. So thank you very much. Thank you for being part of ETX, and have a great week. And once again, thank you for being part of the ETX family. Good night now.